Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll delve into the 3 artificial intelligence AI stocks that could be the next to split their shares. But here's the twist. Understanding these stock splits could be your key to unlocking massive gains in the AI boom. Stock splits might sound technical, but they can create incredible opportunities for investors like you. So if you want to be ahead of the curve and make the most out of these exciting developments, keep watching to discover which companies might be splitting their stocks next. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. Over the past several months, we've seen a significant trend among companies involved in artificial intelligence and related technologies. Stock splits. Several companies have announced or executed stock splits recently, making it easier for retail investors to buy shares at more accessible price points. A stock split doesn't change the overall value of a company. It simply increases the number of shares while reducing the price per share. This makes the stock more approachable to a broader base of investors, particularly those who may not have access to fractional shares. The concept of a stock split might seem straightforward, but it can have a significant impact on a stock's liquidity and investor base. When a company's stock price becomes very high, it might become unaffordable for smaller investors. By splitting the stock, companies make it easier for more people to invest, which can lead to increased trading volume and potentially a higher overall market capitalization. This is particularly relevant in the tech and AI sectors, where rapid growth can lead to quickly rising stock prices. With the Nasdaq rebounding from its late summer slump, a number of AI stocks have seen their share prices soar, making them prime candidates for potential stock splits. This trend reflects the broader market's recognition of the value and potential growth of AI technologies. Let's explore 3 companies in the AI space that might be gearing up for a stock split soon, and why these splits could be beneficial for you as an investor. First up, we have Meta Platforms, ticker Meta. While many might not immediately associate Meta with artificial intelligence, the company has been quietly positioning itself as a major player in the AI space. CEO Mark Zuckerberg and his team have invested heavily in AI infrastructure, aiming to compete with leaders like OpenAI. Meta's approach to AI is unique because it integrates advanced machine learning techniques into its core products, such as Facebook, Instagram, and WhatsApp. This integration helps enhance user experience by providing personalized content, better ad targeting, and even safety measures to detect harmful content. AI isn't just a side project for Meta. It's deeply woven into the fabric of their business model, making every user interaction more engaging and valuable. One of Meta's most strategic moves was open sourcing its LLM, large language model Meta AI code. By making this code available to the public, Meta invites developers worldwide to contribute improvements, fostering rapid innovation. Unlike some competitors who keep their AI models under wraps, Meta's approach could accelerate advancements in AI technology, as a global community of developers can fine-tune and optimize the LLM model. Why would Meta, primarily a social media company, be so invested in AI? The answer lies in how AI can enhance Meta's core business. AI is critical for increasing user engagement and improving ad targeting, both of which directly impact revenue. In the most recent quarter, Meta reported a 7% increase in daily active users and a staggering 22% increase in revenue. Even more impressively, operating income jumped by 58%, showcasing how effective its AI initiatives have been in boosting its bottom line. Furthermore, Meta's AI investments aren't just about enhancing existing products. They're about future-proofing the company for the next wave of technological innovation. Meta is exploring potential future revenue streams from more advanced AI services, such as automated tasks for content creators, virtual assistants, and premium AI capabilities for businesses. These developments could open up entirely new markets for Meta, providing a diversified income stream beyond its traditional advertising model. Interestingly, Meta is one of the few tech giants that has never split its stock. With its share price hovering above $525 and a solid valuation at 26 times earnings, a stock split could be on the horizon. Such a move would make Meta's stock more affordable for everyday investors, potentially driving further growth in its share price. A stock split could also attract more retail investors, further boosting the stock's liquidity and overall market appeal. But how can we best analyze stocks like Meta using technical indicators? Let's explore some strategies. First, the exponential moving average, EMA. is a powerful tool to identify trend direction and potential entry points. For Meta, we should keep an eye on the 20-day and 50-day EMAs. If the 20-day EMA crosses above the 50-day EMA, it could signal a bullish trend, suggesting a potential buying opportunity. On the other hand, if the 20-day EMA crosses below the 50-day EMA, it might indicate a bearish trend, signaling caution. Next, the Relative Strength Index, RSI, is useful for determining overbought or oversold conditions. For example, if Meta's RSI goes above 70, it might suggest that the stock is overbought and due for a correction, which could be a signal to sell. If the RSI falls below 30, the stock might be oversold, indicating a potential buying opportunity. Moving average convergence divergence is another crucial indicator to watch. The MACD helps identify momentum shifts and trend reversals. If the MACD line crosses above the signal line, it generates a bullish signal, indicating that it might be a good time to buy Meta. Conversely, a bearish signal is generated when the MACD line crosses below the signal line, suggesting a potential time to sell or stay cautious. Lastly, Bollinger Bands can be particularly helpful for gauging volatility. For Meta, if the stock moves above the upper Bollinger Band, it could indicate that the stock is overbought, suggesting a potential sell signal. If it touches or falls below the lower Bollinger Band, it might be oversold, indicating a potential buying opportunity. A band squeeze could also signal a period of low volatility and a potential breakout. But before we dive into the next stock, here's a quick question. How do you think AI will shape the stock market in the next decade? Drop your thoughts in the comments below. Next, we turn our attention to KLA Corporation, ticker KLAC, a key player in the semiconductor equipment market. KLA specializes in process control and yield management systems, which are essential for producing high-quality, defect-free chips. As artificial intelligence continues to drive demand for more powerful chips, companies like KLA stand to benefit significantly. KLA's technology is critical in ensuring that semiconductor manufacturers can produce chips efficiently and without defects. KLA dominates the metrology and inspection market, with a commanding 55% market share in some areas. This dominance allows KLA to maintain high profit margins, with an operating margin of 41% reported last quarter. High margins combined with steady revenue growth have enabled KLA to consistently raise its dividend, reflecting a commitment to returning value to shareholders. The surge in KLA's stock price, currently around $820, makes it a strong candidate for a stock split. Similar companies in the semiconductor equipment sector, such as Lam Research, have already announced stock splits, indicating that KLA might soon follow suit. By splitting its stock, KLA could make its shares more accessible to a broader range of investors, particularly those interested in capitalizing on the growth of AI-driven technologies. Moreover, KLA's financial stability and robust market position give it a solid foundation to support its growth ambitions. The company has a history of strategic acquisitions and partnerships that have expanded its technological capabilities and market reach. This proactive approach to growth and innovation further strengthens KLA's position as a leader in the semiconductor equipment industry. For KLA, the EMA and MACD can be particularly useful indicators. Monitor the 20-day and 50-day EMAs for crossover signals that identify trend direction. If the MACD indicates a bullish crossover, and the stock price is also above the EMAs, this double confirmation strengthens the buy signal. Additionally, using RSI can help gauge overbought conditions, especially after strong price movements. Combining this with Bollinger Bands can help identify potential correction points, as high stock prices nearing the upper band could signal an overbought market. Finally, let's talk about Arista Networks, ticker ANET, a company specializing in network switching equipment, particularly for data centers. With a share price around $350, Arista may not be as expensive as Meta or KLA, but it still stands as a potential candidate for a stock split. Arista has been a disruptive force in the networking space, thanks to its innovative switch architecture and proprietary EOS software. Unlike traditional networking solutions, Arista's approach leverages merchant third-party hardware, which reduces cost and improves performance. This software-centric model has allowed Arista to maintain impressive profit margins, with an operating margin of over 41% and a return on equity of 34.5% reported in the last quarter. As AI becomes more integral to business operations, the need for efficient, high-performance networking solutions will only increase. Arista is well-positioned to benefit from this trend, particularly with its recent collaboration with NVIDIA on a new AI data center solution. Arista's focus on innovation has also led to the development of new products and solutions tailored to the needs of modern data centers and AI workloads. The company's commitment to advancing its EOS software and switching architecture has positioned it as a leader in the networking industry, with a strong reputation for reliability and performance. A stock split for Arista, whether a 2-for-1 or 3-for-1, would make its shares more affordable for individual investors, potentially increasing liquidity and attracting more buyers. With a strong growth trajectory and a commitment to innovation, Arista is poised to continue benefiting from the expansion of AI technologies. A split could also help Arista align its stock price with other tech companies, making it more appealing to a broader range of investors. For Arista networks, the Bollinger Bands are particularly helpful for identifying periods of low volatility and potential breakout points. If a stock moves above the upper Bollinger Band, it could be overbought, suggesting a sell signal. If it falls below the lower band, it might be oversold, indicating a buying opportunity. The MACD can help confirm momentum shifts, while RSI is useful for assessing overbought or oversold conditions. By combining these indicators, investors can better time their entries and exits. Let's take a closer look at this table. We have Meta Platforms, KLA Corporation, and Arista Networks, each showcasing some impressive numbers. Meta, with its massive market cap of over $1,300 billion and a strong revenue stream, is leading the pack with an 81.49% gross margin. KLA Corporation isn't far behind, boasting a market cap of $108 billion and a high earnings per share, reflecting its profitability in the semiconductor space. Arista Networks also holds its ground with a robust market cap and solid gross margin, making it a key player in networking solutions. These high share prices indicate strong market performance, and a stock split could make these shares more accessible to everyday investors. It's clear these companies have the potential for significant growth, so keep an eye on them as we watch for any stock split announcements. So there you have it. 3 AI stocks that could be gearing up for a split in the near future. Stock splits don't change the fundamental value of a company, but they do make shares more accessible, particularly for retail investors. Meta Platforms, KLA Corporation, and Arista Networks are all strong candidates for a stock split, thanks to their significant roles in the AI space and their high share prices. And as we wrap up, here's something to ponder. In a world where tech giants keep innovating, which company do you think will surprise us next with a major move in the stock market? Share your guesses in the comments below. Remember, investing in stocks always comes with risks, and it's essential to do your research and consider your financial situation before making any investment decisions. Thank you for watching today's video. If you found this information helpful, please give us a like and subscribe to Simple Investing Secrets for more insights on stocks, the stock market, and investment strategies. This video is for informational purposes only and should not be considered financial advice. See you in the next video, and happy investing.